Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. First thing you're looking at there is our recent returns, performances for the dual day trader ES. This has actually been an outperforming strategy, but we'll look at that in a second. The first thing we're looking at is a chart of the market. Today is Friday, April 17th, 2 days after tax day. Looking at the last print on the E-mini S&P 500 futures contract front month of 862.50. Market really just doesn't seem like it's going to go anywhere today. We've got major resistance around 865. Well, why can't it just break through 865? Why can't it just break through the high of the late session yesterday? Well, although we are trying to hold the support around this swing point high, just really don't have any evidence to support that. We have a little bit of bullishness right here, but really with this divergence here and this divergence here coming after yesterday's move, just don't expect the move or the market to get above 865. Now, having said that, if we look back Friday, Thursday, Wednesday, Tuesday, Monday, and a nice move higher late in the day on Monday, but as you can see, the day following, bearish gap, come back to fill it, retest the underside of the trend, and lo and behold, amongst our proprietary indicators, our intraday dynamics, there was just really no support for it. We had an extreme negative divergence right there, a negative divergence right there, just wasn't quite getting it cut, getting it done. Making the cut, and of course, once you move back to the downside under the trend and certainly retest, that's a great shorting opportunity right there. And of course, as you can see, once the trend is broken, it's all the way to the downside. So that was bearish right there. The day following, we did get a positive divergence among this indicator, but our secondary indicator was full bearish, so really weren't expecting too much. But once it started to accelerate right here, we did get some acceleration. It was really a choppy market, but as you can see, there was at least the potential to have a move higher, and we did actually get that bounce, triple bottom right there, and bounce this close above the intraday high and matching the high of the prior day essentially. Around 850. Came down, retest that round level of 850. On Thursday, you did see accelerating bullishness, a quadruple bullish bias, and lo and behold, what do you get? A move of nearly 20 points late in the day. So definitely kind of some great trade setups that we're seeing here. And of course, as Friday, we have no reclamation of the prior day's high. Just really tried it in the morning, tried it again mid. But we have to do have to keep in mind that we are fully bullish. Right here, we have a quadruple bullish bias. So should we get above the 865 level, again, we're quadruple green right here, and should we get some acceleration right here, maybe a little bit right there. We are fully bullish right there. It could be interesting, but as it stands right now, certainly extreme negative divergences suggesting that the market on here on Friday into the afternoon is really just not going to get above 865 to 867. Now, having said that, we're going to go ahead and minimize that and take a look at a daily chart of the market. There's our swing system 5.0, putting in some very nice winners. Actually caught in a short setup right now, but there's a nice buy. 74.50 we'll call it, almost to 77.50. Nice 300 points in the Dow. 7,800 to 8,000, another 200 points. This course for April. So this system putting up a banner month so far. Swing System 3.0, that trades the EMD. That's also doing quite well, putting up some very nice numbers, is the case right there. But we're just going to go ahead and switch down to the daily chart of the S&P 500 cash. Not really much has changed here. We're just holding on to our official market timing bullish stance after again booking 500 points in gains. Discretionary bias right there, short. 500 points later, went ahead and switched to bullish instead of neutral. Should have been neutral. Went ahead and switched to neutral once we saw this break to the downside, and went back to bullish once we saw the reclamation. Of course, did mention that a great time to take your short profits was on this day, close of 683.38, nearly 200 points lower. Certainly would have been a great opportunity to go ahead and nibble on some long exposure, but definitely wanted to get out of your short positions fully. And given that extreme, surely you had scaled out prior to that, but definitely a great time to get out of there. What are our indicators saying? Again, fully bullish for our intents and purposes, although we do have the mother of all key trend following support resistance measures coming in at 960. We do expect a move to 900 to 1,000 at least, we'll call it. Actually, probably retesting the swing point high around 943.85. So we'll call it at 900 to 950 as our target range for this move. From a momentum standpoint, fully bullish, intermediate term, short term. From a directional movement perspective, we are short term bullish. With the intermediate term not really coming online just yet, but should we? That's because we do have this just kind of like a slow trail. Should we get some acceleration, you'll certainly see the intermediate term come on as well, and that will be certainly good. Certainly, should we get above the 950 level and break above 1,000. Then there will be a huge sigh of relief, and you'll definitely get a lot of extreme short covering and a lot of people certainly buying the market. But we're going to go ahead and look over now. So that's the daily chart. Our dual day trader ES has really outperformed. If you look at, for instance, just the dual day trader DS, had coming off 2 losing months. Has been a very interesting start to the year, but 2 losing months. This was March and February. And so dual day trader putting in a losing month in February. A lot of our portfolios lost in February. There's a big loser right there for the triple threat trader. Small loss for the MAP DTS version 4.0. Small loss in February. Definitely great times are they to get started right around here. Once you see these little losses, boom, 2 huge months of gains. Little loss, big gain, small gain, bigger gains. Little loss, big gain, or little loss right here, we'll call it huge gains. So it's definitely a great time to get started trading one of these portfolios after a drawdown, as we've mentioned so often in this space. And of course, we've run some specials to help you guys get started, to kind of push you over the fence, that this is a great time to get started. But as you can see, and there's of course Matt Black version 2.0 putting in 2 nasty months and just one little small gain right there. One big loss right there. But what we're looking at is the dual day trader DS. That's actually right up here. We just went too far. See, these numbers right here are actually the numbers we need. So the dual day trader DS, ES, sorry, coming in very nicely right here. Dual day trader ES putting in 1,200% return, matching 100% roughly max drawdown. If you guys are interested in any of these portfolios, we actually have a special right now. Any MAP DT, we're continuing. Any MAP DT is 20% off. Enter promo code video. That's a MAP DT, MAP DTS, anything you want, any version is 20% off. What's more, if you're interested in dual day trader ES, you can buy 4 of these and get one free. So essentially, you're only paying for 3. So you can either run 4 consecutively, or you can buy a whole year's and only pay for 3/4. Just enter promo code DDT_ES. So if you guys have any questions, go to the website, chat with the support team, or shoot us an email to admin@MiniAnalyst.com. And we'll certainly get back to you. So we hope you guys have a great trading weekend and trading week ahead. We'll see you next time.